The Fed's actions or non-action, they kept rates pat, right, not moving, are reverberating all the way from the floor of the New York Stock Exchange to Southern California. Charlie Gasparino is in Beverly Hills at the Milken Conference, where I guess the president's criticisms of the Federal Reserve, Charlie, and its ability to stay independent are taking center stage.
Yeah, I mean, there's a lot of people here that obviously they're part of the establishment. They do worry about the Federal Reserve, and Jerome Powell and the board of the Federal Reserve being independent. They do worry about that Trump may be appointing political types to the board, like a Steve Moore or Herman Cain, who is bowed out as you know. But I did ask Eric Cantor, former GOP House Majority Leader, now an investment banker at Molson Company. I said, you know, is there kind of an upside here? I mean, and he basically said there is. Here's what he had to say.
What do you think about what he's doing with the Federal Reserve? You know, listen, every president going back forever, I remember the debate in the Reagan administration, I'm old enough to remember this, where the supply-siders were, you know, up in arms that Paul Volcker was raising rates. Reagan came out supporting him, but there's always been a political back and forth between the administration and the Fed. But doesn't this seem his attacks on Jerome Powell and even his nominees, Herman Cain, who I think is a very nice guy, Steve Moore is a friend of mine, they seem a little overly politicized. Don't you agree with that?
Well, I can only say that if you look at what the president did, it was pretty crafty and wise. If you want to see these rates come down and not go up, whether they stay the same or go down, to go in on public attack, it puts the Federal Reserve Board in a position where, one, they don't want to be seen to be reacting to any political pressure, but they also, as policy makers in the monetary realm, they don't want to not do something that needs to be done just because they don't want to appear political. So it's like a no-win for them either way. And again, it looks like the president got what he wanted. I mean, obviously with the rates staying where they are, we look and see what's going on in the markets. And a lot of good economic data out today.
Well, you know, Liz, the markets are off today a bit. I don't think it's because of what the Fed did. There's a lot of reasons to take some profits right now. But if you look at it, after that December swoon, that implosion that occurred, you know, when the Fed was raising rates, reversing the quantitative easing, selling their balance sheet into the market, you know, rates backed up, stocks sold off, that has stopped. And in a sense, Trump, you know, had a victory here. I mean, I don't think we could underestimate this. I mean, he basically got the Federal Reserve to back off. He jawboned them. Is it good or not? I mean, you know, long term, I guess we can make a lot of we can make the case that it's not good to have a non-independent Fed. Short term, at least, or medium term, we got a market that keeps going up, and it's going up because he got the Fed to back off the rate increases, particularly on the short end. And I'll tell you, Cantor is a pretty savvy political guy. He knows the markets pretty well. As I said, he works in investment banking. You know, and he was not like an unabashed Trump supporter over the years. This is a you know, part of that more globalist wing of the Republican Party. He gives victory to Trump on this one. It's pretty amazing. Back to you.
I would say this. President Trump was right to flag the Fed and say, be careful here. We are seeing a bit of a slowdown. And the Fed woke up and stopped raising rates. However, the Fed has a very important mandate, and that is to be ready to protect the country if we do have some type of financial crisis, the likes of what we saw before, and to make sure that they have their toolkit ready, willing, and able. If you get rid of all your tools when you don't need them and then you need them, that's a problem, Charlie.
Yeah, no, you're right. You know, listen, the Fed funds rate now is at a level that if you needed to lower rates, right, on the short end anyway, you know, because we have a recession, there's not that far you could go. You can go into the market and do quantitative easing, and we can discuss exactly what that is. That's buying securities out of the markets. When you buy a bond out of the markets, the price goes up, the yield goes down. It's very powerful. It's what they did right after the financial crisis. They still have that in their quiver. I think the problem with Jerome Powell, and I think, you know, Trump is not a trained economist by far. What he did was he said, listen, he's looking at Jerome Powell on the long end, unloading the balance sheet, and on the short end, raising rates. Both of those together had a very powerful impact on the markets. I don't think he could do both. It looks like Powell has backed off. Obviously, he has backed off the short end. They're still unloading the balance sheet on the long end, and that's maybe the way that they should approach this thing.
Safe journey back, Charlie.
Anyway,
Thank you so much.
that's my view from sunny California.
Yeah, I'm jealous. Thanks so much.